to Weekly Open. I'm Brian here with Cred and Don. We will talk as much as we can about the terrible market that is. Before we get to that, though, let me tell you about FTX. FTX is our presenting sponsor. Go to weeklyopen.com/FTX, where you can trade directly from one asset to the other. Seems like most people are just trading directly to dollars these days, but you can do it on the FTX app, weeklyopen.com/FTX. Thanks to them for being our partners. Now, let's get to it. Don, how's it going?
Really good. I mean, it's really good unless I look at the charts, which then makes it kind of like, but it's not as good. I'm like on vacation, enjoying life. And then as long as I close my eyes every time I wake up in the morning, when I like have the urge to look at the charts, it's actually just fine. It's just when I actually have a look at it, it starts getting rough. But there's like some hope left, I think, a little bit. So doing decent.
Cred, I don't know if you heard that, but Don has some hopium, so
I'm ready to hear it. Yeah, no, it's as the famous bull of the show. I'm sure he's got a very well considered argument for the upside. So, how have you been, Ledge?
I'm doing pretty well, all in all. Watching
all in. Oh my God, already?
Yeah, all in. Yeah,
watching all in all. Yeah. Nice.
Watching my net worth go down by 3 to 5% per day.
Wow, you're doing well.
Yeah, I'm just looking at this. We have not had a weekly close below about 32K. Did y'all even know that? Like since this whole run started, I didn't realize that. Those have always been wicked when we've gone.
Oh, I've realized that because that's the level I've had, and I wanted to trade on the last dip, however many months ago that was. That kind of lowest close all the way back from whatever October 2020, right? Like literally where you've got the line. I tried to buy that last time we came into this area, didn't get filled, so I was just in. I pretended the rally that followed wasn't real. So that one was fine. It's just the most recent one just didn't click.
Yeah, this one right here.
Yeah, exactly. So that's a bit annoying. But overall, yeah, I mean, I can't believe that. It's just then you look at the weekly and kind of monthly charts on indices, and it makes you sick.
Yeah, I mean, I think obviously we're looking at Bitcoin, and we can go down the list, and we will. But there's only really one narrative ruling all. And it's just dollar strength and equity weakness. But I think you might as well just say dollar strength because, we were just talking about the euro, British pound, any currency really you can think of, everything getting wrecked relative to the dollar. Dollar's legitimately, the Dixie's gone parabolic. And, we've been talking on this show for, I don't even know how long about this box, and you're just giving me a hard time about the size of the box and how it's running out of room. And it's just green space above that to the highs for the Dixie back in March 2002, which was the depths of the tech recession. Where do we want to start today, guys? Should we be talking about Forex? It's a good bottom signal, so let's do that.
Yeah, we've tried to betard this, right? Like on this
we've
show.
tried so hard.
We've tried so hard to be like mega doomer, and then hoping that the next week it's up 20%, and we are the sacrifice, if you will. But it's been one-way traffic. I think that's the point I wanted to make on the weekly time frame as well. Just completely forgot the consecutive red closes, both on crypto and obviously indices as well. That's kind of insane. I don't remember the last time we had six. Like if this closes red, which it's gonna be a long big week ahead, whatever. But like in terms of consecutive candles, it's pretty rare what we're seeing right now.
Yeah, this would be the 7th down week in a row.
That's mad, dude.
On Bitcoin, and that I looked back on it, and I don't even think I could find one that was that significant.
Great.
Yeah, like
stuff you love to hear.
Even in the like confirmation of 2018, there was one green week amidst that, but there's still a lot of hopium back here in April, May 2018, and that was when we had a kind of shaped the bottom, but it was six out of 7 red weeks. Other than that, I legitimately don't know of anything.
I mean, it's at least it's like small candles it could be much bigger, but it's still pretty brutal. Like having week after week just being like more down, it just gets like disheartening really quick. Right, where people are like, I just want like 1 week where I can feel good again. It's just not gonna come.
Yeah, January 2015 is the closest, where the one green week was by no means a nice candle. So, but yeah, it's real bad. Don, I don't know whether to feel better or worse about at least their small candle so far.
Yeah.
Ominous.
Ominous.
I honestly don't know either, because like if this actually capitulates, the longer like these small candles go on for, the worse it's gonna get, right? So like if it actually capitulates, I don't know where to target. It would have to be low 20Ks really. But if we kind of manage to like stabilize, I think there's like quite a bit of room actually to the upside. It just doesn't really look like it, especially with like the Luna FUD and everything that's going on right now.
Do you think that's a real systemic risk to Bitcoin, or is it just a systemic risk to Terra Luna stuff?
I mean, they've been selling so much stuff, right? I mean, so many people have been selling ETH to kind of peg UST back, from what I've been seeing. So it's like it's already doing damage. I feel like it's not necessarily systemic yet. I don't know if it's ever going to be, but it's pretty bad, I'd say.
Thing is, it's just like too many dollars. Like the notional sizes are enormous, and then if you consider when liquidity is like much drier, the likelihood of this kind of spillover contagion risk in crypto when you're trading just a big correlated basket of shit is also much higher. So I guess if you had to kind of articulate systemic risk in those terms, it wouldn't be, oh my god, look, Luna's going to like nuke their entire BTC treasury. You don't need to go that far to make that argument. You just kind of have to look at the sheer sizes that are involved in keeping the peg, right? And then also how you'd expect that to behave in a market that's not particularly liquid, and that's sort of what we've seen recently.
So when the price is shaped on the fringes, it doesn't take that many coins to
exactly. Yeah. A couple stuff breaks, and algo starts selling the correlation, and not even. I mean, within crypto, not even like crypto legacy, right? And the whole thing just becomes pretty tightly knit. And also, they announced some lending today, right? The LFG Foundation, I think the council deployed, what was it, 1.5 billion, which is, 1.5 billion, half of that in BTC, half of that in UST, to basically market make around the UST peg. And that doesn't sound purely directional, and it isn't. However, as per Do Kwon's tweet, it says, as markets recover, we plan to have the loan redeemed to us in BTC, increasing the size of our total reserves. So I guess you could argue there's some directionality built into that. And obviously, if UST, if the peg continues to get pressured, that's still inflows that you need on the other side. So I don't know. I'm not like, I guess it's not as delta neutral as it seems at first. And if the whole thing gets hammered, then those are going to be net sellers of Bitcoin. Even if it's just to hedge the loan. So I don't know. I don't love it.
I think it was a bit of a sign when basically every time Do would buy, it just didn't last in terms of moving Bitcoin to the upside. Like it just felt like he was the source for all the distribution that was occurring amongst larger holders. Yeah, but anyway, so
I mean, who's selling to him, right? That's the question. This is like this is a massive size that they were buying via LFG. Like they weren't trivial numbers. I think they're now. Are they the biggest Bitcoin holder, like on an individual basis? There was some sort of treasury list. I think they're bigger than MicroStrategy now, right? But really? That's like I think so. Well, they must be getting close. But that's like a lot of BTC just got completely soaked up, right? Like fully absorbed. Didn't even make the market flinch. Didn't even give us much of an uptrend, right? Got completely swatted down. And now we're well into the lows. That's a lot of size on the other side of that trade, And I'm wondering who / what that is. Is it just a correlation trades? Is it outside capital kind of taking? How the TradFi crypto trade was essentially some sort of futures premium arbitrage, or the GBTC trade or whatever. Like the brainless TradFi guys want to get into crypto. It's like the futures premium trade. I wonder maybe if the correlation trade is the equivalent of that in these market conditions. I'm not entirely sure, but in any case, those are some meaty counterparties, who soaked up all that buying. That's pretty impressive and pretty telling.
Well, the May 5th reported one with the Luna Foundation was a $1 billion OTC swap of UST for BTC. And that had Genesis and Three Arrows Capital involved. So Three Arrows was at least one of their counterparties in one of these deals.
Yeah, but they said they didn't necessarily sell to them; they just bought for them. Apparently.
Yeah, they were doing the execution.
Okay, that makes sense. I didn't actually see that. So
yeah, that's my understanding at least. But in any case, you've got that much buying, and they just
where show me on the chart where
right,
$1 billion of Bitcoin was bought.
Yeah, exactly.
Was it this candle?
Yeah. I mean, I don't know, right? Like, it's as Don was saying, when you get these algo stablecoins, first of all, the narrative at this point is very forced and very contrived. You've got like dead ghost chains trying to reignite like some short-term momentum, doing the exact same thing without meaningfully intending to build an ecosystem. And also then you've got the treasury made up of Bitcoin at an entry price, which sucks. It's also made up of shit coins, which are like new to market cycles and haven't done their classic kind of 70, 80, 90% down. And then you're requiring, exotic amounts of capital just to keep the peg intact at a time when the market isn't even like super, super scary, right? It's still like above 30K and it hasn't broken, the volatility expansion, as per Don's analysis, the candles are still small, yet we're taking all these extraordinary measures to keep this peg intact, which, I don't love the look of that.
One of the components of that I find interesting was back in this bear market, mining was not profitable at these levels. And up here, mining is still quite profitable at 30K, if I recall correctly. So I don't know. Some of the dynamics of the market don't make sense to me, where it doesn't feel like that painful, to your point, Cred, if miners don't feel like they are just a forced seller constantly, or like are being stressed because there's too much hash rate competition for, for those coins. Like they just turn the freaking miners on and go for it. It's no problem. They're just still churning away in profit. And it seems like it makes more sense for a bear market to end at a time where competition amongst miners is much more difficult.
Yeah, maybe we have to do the whole miner death spiral thing again. And that marks the bottom where like miners aren't profitable and then people are like, it's all going to shit. And maybe that's the bottom again. Would be kind of funny if it like just played out the exact same way it did in 2018. But obviously don't hope for it, because I think that's actually quite low this time around. Like you said, I think the miner profitability is quite a bit away. So it's not really the support that you want to be hitting.
Right. And where are, the other fun bits, like the substratum of the cycle and consensus laying off a bunch of people and hiring crunchers and whatever else? I think we're starting to see some of that in the venture space, like in TradFi type of circles, more so than crypto. But yeah, as far as the really scary, big notable fund blow ups, all that type of stuff, the market, to me at least, doesn't like seem super panicked, which may be good or bad depending on how you look at it. But there is still a decent comfort at these prices, which makes sense. Just over the last couple of years, up like what it was up, like it's still 10x from COVID lows basically. But yeah, I think structurally, one thing that stood out to me is the amount of cope when it comes to calling this type of stuff consolidation or chopsolidation. It's like you look at a lot of these charts, especially non-Bitcoin and ETH chart, but even those, it's like those are trends, right? These are downtrends, which are just breaking down for weeks and months now. And if we do get chop or consolidation or whatever, that would literally be like the most bullish thing you could hope for Bitcoin, if it just grinds around 30K-ish, stays there, and then you get your next cycle from those types of price levels. That would be like an almost impossibly bullish case, because everything else looks like it's nuking. A lot of it's already nuked, like fully retraced its COVID rally, trading back at those prices, and just looks like shit in general. So if you're going to cope and call a lot of the stuff which is down like 50, 60, 70, 80% chopsolidation, then that's actually a very, very optimistic outcome for all of this, that the 30K is not 6K, and that's where we get our grindy reaccumulation and go up from there. But it's just not, I don't think it's a very helpful way of describing the market when stuff is down this much and in such a linear fashion, like the highest number of consecutive red weeklies, etc. Just calling that chop or sideways or crab. It's like at a certain point, it's a trend, right? Even looking at, very recent price action, like on the daily or the 3-day, whatever, the market basically moved sideways for 100 days and then broke down, right? That's I don't know, even like with basic brainless TA type of stuff, you've got to interpret that as a breakdown until proven otherwise, right? And if it does prove otherwise, as Don says, it gets pretty juicy, right? Even for a bear market rally, there's some nice squeeze setups to be had, but it's not really screaming that at the moment. I don't know what you think of that breakdown, Dark Core Ledger.
Yeah, I mean, I'm not excited until we kind of reclaim it. If we do reclaim it, like Bitcoin wise, it starts looking decent, I think. The problem that I have right now with this market is just that we're so correlated that it doesn't really matter what like the Bitcoin chart looks like, because I could make a bunch of arguments why like Bitcoin actually looks somewhat decent right now just based on the Bitcoin chart. But it's just, if the S&P or the Nasdaq just continues to nuke, that's not going to matter one bit, right? Because we're just so correlated that we're just all going to eat shit together. It's not going to be, and I mean, a bunch of people have tried arguing that Bitcoin is going to be like the safe haven, and they're all poor now. And I think that's probably going to continue if we get like macro weakness. And that makes it really, really difficult, right? Because usually at where we are right now, and I mean, I can screen share this really quick.
Yeah, go for it.
But usually I would be, can you see my screen?
Yep.
Usually I would be like all over this, right? Because we're like at monthly support. We're poking below it. I'd be interested to see like what happens if we grab any liquidity here. Like if you get wipeout to the downside, I'd be like, okay, maybe I can buy this for a snapback up above monthly support. And then you can like, if this was just Bitcoin on its own, you could easily target range high, which would be 56K, right? Which sounds nuts now. But I mean, that's just how Bitcoin usually trades. But it's not necessarily how like the traditional markets trade, which makes it so much more difficult, because then you have to factor in, okay, we are sitting at support right now. It's not necessarily broken because we haven't closed below it, but the Nasdaq and the S&P have closed below their supports. They look absolutely atrocious, and it feels like that's just the beginning of it all, right? And that is very, very scary, because I mean, where does Bitcoin go if these traditional markets go down another 30%? Because they have room to go 20-30% down, right? There's gonna still be above the COVID lows. And I mean, Bitcoin, if it goes down 50%, is going to be too. But at that point, it looks really fucking shit, right? So it's like a bit of a scary moment where you kind of have to realize that, like, if the traditional markets rug pull, we're gonna rug pull really badly, and then no bid's really safe, and that makes trading this really, really difficult. Because usually, like I said, I'd actually be looking for buys right now, just based on the fact that there's a lot of room to the upside, and you have like a bunch of supports ish in this area. It's just really, really tough right now. And the daily, obviously, as Cred said, just looks completely shit. And I think that's actually one of the ones where you might be able to momentum trade, as in if this turns around, comes back above 36K, that could be a play to be made there. It's the same. And I actually talked about this, and I think Cred did too, if I remember correctly.
The mirror setup, right?
Yeah, the mirror setup where we have like the poke above the range, right? So the range is 35 to 44. We had the poke above it. We could get the poke below it. But as I sat back when we were like breaking out here, I was like, we broke out. You don't need to fade this. You can fade this the moment we fall back below it, right? I made a few arguments that it looked weak when it was breaking out, but I wasn't telling people, okay, you should short this rally. But the moment it actually fell back below the breakout point, that's where I was like, okay, this is actually really, really bad. And the same thing would be true in reverse, obviously. The problem is, if you kind of look at this, this breakout had like a strong breakout and then started doing nothing.
Yeah, it had one good day, right? Literally one candle.
And then you look at what happens here on the other side of things, and that is the candles are getting bigger and bigger, momentum seems to be getting higher, like not lower. Like this is just like we had a momentum breakout and then nothing happened, and here we have like a slow breakdown and then we get the momentum to come in. That's like super scary, and that's not necessarily something you want to be fading. So you can either wait for the capitulation, which I think would take us easily into the 20K region, not necessarily like 20K, but like 24, 25, something like that. I think would make sense for capitulation, or just for strength to come back, right? You don't need to trade this shakeout below the range if we come back above it, because then I think you can take, even if you're like super, super conservative, you can just play from range boundary to range boundary again. And don't ask me why that just drew like that. But yeah, at that point, that's like a much, much better trade than just willy-nilly buying somewhere in the middle, praying to God that it holds, because not only does it need to hold in crypto, it also has to hold in the traditional market. And yeah, it's just, that is a tough environment to trade in. So I'm just kind of like in team don't trade this unless you absolutely have to, or unless you have edge. And most people, I don't think, like most people don't have edge in this market right now, I think, just based on the fact that we're all like professional or semi-professional like crypto traders. We're not professional or semi-professional S&P or Nasdaq traders, right? Most people have no idea in this market what those markets do and why they're behaving the way they do, and the markets trade quite differently. So when we're copy pasting them, basically, do you really have edge? As something you should be asking yourself, I feel like. So yeah.
I'm trying to Google the consecutive down week records, not just for crypto, but also for
markets.
For stocks. Like they're in their the S&P's just started its 6th down week, and we closed 5 weeks, and just I don't know the last time that happened either. COVID was 1, 2, 3, 4, 5 weeks, and it's just we can't do anything unless we get untied, right? To your point, Don. And yeah, I don't know what to make of it. I'm actually extremely bullish, Bitcoin and Ethereum in particular, in the long term as a response to all of this, because I think we're going to have like sustained higher inflation. But I think like people are talking like, when are we entering a bear market? Like we're well into one. Like, could we be entering a recession? If we're in a recession, we will find out later that we've been in one for months. We're already like well into the move, and the hard part is, where do you find exit? Where do you find exits for people that are still seeking them? When you're on your 5th and 6th down weeks in a row, and multiple months of wreckage, because by the time you puke it, the likelihood is there is going to be some kind of bounce.
It's
and that's
June, July, I think. Well, the one I found at least is June, July of 2008 on the S&P, at least the index I'm using, and it basically went down for 6 straight weeks. It bounced, and then that was the implosion, the 2008 proper implosion, like crisis prices. So you had 6 weeks down, was like about 17%. Then it bounced about 8-9%, and then everything vanished and we all died.
Was that
sample size of 1, of course, but
that's basically this little thing.
July 2008. Yeah, exactly.
Honestly, it looks kind of familiar. Doesn't that look familiar?
It does. Close it down, close the stream.
And not to say this is the same thing, but after something like that, you think, okay, back to normal. And then, you find out you get back into the congestion zone of where it broke down from. And like, there's just plenty of willing sellers. And then you just got to be out for this is the problem, so you're like hoping that you catch the bounce, and that's what's creating the selling. Obviously, there's tons of like fundamental reasons for that, and there's no guarantee that it has to exist this time. I listened to most of Jerome Powell's last talk. I don't know if y'all did, and I found it really interesting because the way that he spoke, and then the way the market responded, and then the way the market changed their mind on how they were going to respond was all fascinating. And I just hate that we're so tied to this. Like, in a way, I just want us to go ahead and puke and nuke and bottom, and then give us some time to potentially decorrelate, even if whether that's up or down, just like not be so attached to that market. But in his statements, he kind of talked about the overall strength of the economy and how like they're going to watch, but 75 points is off the table. And, he's trying to walk this super fine line because, as noted during his talk and after, like, people are hanging on every word. And in general, I think it's not a good sign when people are just hanging on absolutely every word of the Fed. Like, they need to save it,
Yeah, and it's not even just like a radical shift in policy or anything. It's like, okay, rate hikes are coming and they're going to be aggressive, but they might be marginally less aggressive than we thought 2 days ago, and therefore long the market, right? Because the gradual progression as to the speed of the tightening, that whole timeline is absolutely insane. Because it was like 25 basis points, and then 50 basis points was like, it was pretty much just Bullard and maybe one or two other members. And then within a week or two, the 50 basis points, which was a outlier view, became the consensus view. And then even that wasn't enough. And it became a fact of, okay, we're going to do 75. And it's like, no, we're not going to do 75. And that was seen by some participants as a good enough reason to long. When just 2 weeks ago, even suggesting 50 was insane because that was the outlier view compared to the 25. And this all took place within 1 to 3 weeks, like not 1 to 3 weeks, like 2-3 weeks. So it's like goalpost shifting. It's the market itching for a reason to get a relief bounce and to get long, to get something. And we see that in crypto as well, when liquidity is like focused on maybe 1 or 2 narratives and 1 or 2 coins. And that's just never a particularly inspiring sign. You want to see like a passive bid, if you will, on Bitcoin and ETH, like a wealth effect type of market structure, and then for that to float down and trickle down quite naturally to beta assets and altcoins and that type of stuff, right? This kind of dispersion starting from the big caps, which need more money to push them around. Instead, you've got like a few people who've survived and they're just like slugging their stable coins into whatever altcoin might have a pump or might have a catalyst or a narrative for that day, which is obviously quite different.
Yeah, we want
to stop being influencers and start being analysts. We are screwed. Full stop. Thank you, Johnny Kilroy, for your insightful commentary. I don't know, guys. Like, I feel like Weekly Open's been pretty decent as far as risk on and off and structure and sentiment or whatever else. Kind of our doom posting joke, trying to bear tard the bottom jokes aside. I think all of us, when the failed breakout took place, were kind of like,
it's not good.
This ain't it. This ain't it. Yeah.
Yeah. Should we spend a little time on kind of what else is going on out there in terms of, altcoins and layer ones, NFTs? Is there anything that y'all think is worth mentioning?
You can just look at Sol Luna AVAX, right? And then just kind of see how fucked the market is. Because, it's just so brutal that, Solana is down so much after that bearish retest. I think we talked about that bearish retest on this show like a couple of weeks ago.
No, stop being influencer and start being analyst. Yeah, that bearish retest was massive. The weekly one, right, on the USD pair.
Yeah, the USD.
I think Ledger was tweeting about it as well. Yeah.
Yeah.
And it just if the strong movers, right? If the strong movers start behaving like that, you're well and truly screwed. I think it's just how it is. Like, you see the few coins that have been pulling the market up start going down like 50%. Yeah, there's nothing to kind of make you bullish in that instance. Just like there's so much more room to go to on that Solana chart, for example, that's open. You could easily go down another 50%, right? And we've gone through this before. Legitimately, we've gone through this before, and every time it happens, and every time I say it, people are like, yeah, but this time it's like we're more sophisticated, blah, blah, blah. It always happens again, right? Where these coins go down 80% and then they go down 80% again. And I mean, it's just cycle things, right? And I would be surprised if that just turns around, like just given the macro situation. I've said this on the show like a couple times before, where the only thing that you can really hope for when no one's watching crypto is like exit pumps on the altcoins, right? Because I mean, is retail really like trading altcoins right now? I'd argue not. So even if you started to pump a shitload of money into an altcoin to kind of push it up to entice people to buy, you wouldn't really get people to buy, right? So why would you want to be spending that effort? I don't really see the reason until kind of everything calms down again. And then we can have like some nice altcoin pumps again. But until then, like I'm pretty bearish on the altcoin front. And that's me saying that while I have like still my shitty Litecoin position that I haven't sold before I left. So I mean, I'm bleeding with some of you. It's not going to hurt me too bad, but it does look fucking atrocious. So, and I mean, that's me talking about a bag that I hold myself. So. Yeah.
I just find the whole you know how we've given L1s these almost honorary status among how we look at crypto markets. You've got like Bitcoin and ETH, and you've got like L1s, DeFi. I just find the narrative itself to be such like a late cycle product when ETH is pumped like 10 zillion%, and there are actual users gambling and speculating on this type of stuff. And also funds have a ton of money of deploys. They want to like have their own ETH trade, like sort of Saudis buying racehorses they don't really care about type of thing, right? And as soon as ETH, speculation dies, ETH becomes affordable, and none of the apps on these other layer ones are gaining like as much traction as they were supposed to, and the whole kind of hype is gone, and the relative trade idea is also gone. Like, oh well, ETH pumped this much, and Sol pumped this much, and therefore this is going to pump this much, and making those like second, third, fourth, fifth order inferences. I just think when speculation suffers and retail gets washed out, narrative, out of the stuff that's least well equipped to kind of stick around and whose users are least sticky and all that type of stuff, for me it's L1s, and I find them pretty boring and uncompelling in the kind of market where the block space demand in general is much lower, right? Apart from like maybe a FOMO mint or something like that. And just looking at the Luna chart you've got up there, that's one we fudded on the weekly time frame.
I mean, this looks like
breakout pattern. That looks pretty appalling, right? Like,
this looks like it's going back to $5.
I mean, that's very much a Donald target.
I mean, open up the waves chart and then just compare it to Luna, and the story is pretty much the same one as well, right? So
I mean,
I prefer Luna's founder. He's a bit more eccentric, and
$22 seems high. Like this seems like
turn off log, buddy.
Yeah.
Yay!
Yeah, it looks so much better now. Congrats.
Yes, exactly. I don't know. L1 just seems contrived to me, and I mean everything's contrived in the market's like devoid of speculation, but I think L1's especially so.
This seems like a highly likely future to me. Just sorry. The $94 bet will look absolutely hilarious when it's at $9. And I mean, it only cost you $10 million or something, but it was good marketing.
Fantastic marketing, yeah.
I wouldn't want to be anywhere close to those setups. I've said this many times. I look at Solana. I think Solana might have a generational type of buying opportunity in the somewhere between $20 and $50. Hopefully, if it doesn't go all the way back to Sam levels. I mean, that the reason I don't think that's likely is just because the raw. Well, shoot, I don't know.
They're just like, well, it's only 98.5%. Right? Like, we've all been there.
But Cred, we have been there.
Yeah, I know.
Yeah, but like with that, I actually think it's really nice to compare Solana to ETH, and ETH went down like 90-something%. I think that's like a realistic target, as stupid as that looks right now, because that's still a long way to go. But if it does go 95% down, I'm going to be like in Solana investor, I think, just based on the fact that at that point, you don't really have to throw too much at it to have like a significant position in it. And then if it goes to zero, it goes to zero, right? But I don't think it's going to zero. So at that point, it'd be close enough. But
It's
for
the most
me
bullish
anyway.
thing you've ever said about Solana is that it is going to go to zero.
I don't think it's going to go to zero.
Because it's funny,
Yeah.
like Ledger, even if you eyeball the chart you've got there, right? The top level like under 50 and the bottom level at like 26, you buy the top level and then you blink and it hits the support and you're down 50%, right? That's the crazy thing about this percentage game. You're like, oh well, this is the accumulation zone, and you buy the top of the zone and you blink and it's at the bottom of the zone and half your money's gone. It's mad.
The smart move you only lose 50%. Assuming it doesn't go back to $3. I don't know, man. We've been saying this ever since it was on the upside, right? These last several weeks in particular was like, and these were 100. It went to freaking 250, 260, something like that. It felt like a blow off top back then. It was a blow off top. I mean, look at that. When you take this out of log, it shows you the blow off. Nobody in their right mind was recommending selling or buying Solana in these ranges. And now we're just in this like slow bleed play out of the downside. That
pretty quick, no?
It is.
Well,
it's the slow part's what's next, right?
Oh, great. Thanks.
I mean, I think that's real. I think that's the part that's slow, and it's not even what I would want to accumulate. I buy these things once these things like really settle down. I think accumulating ETH BTC is fine. I think for most altcoins, like you want to buy massive capitulation or you want to buy recovery, which Don's talked about a lot.
Yeah, I think in general, it's just we're gonna see the market slow down at some point, right? Not just like the crypto markets, but the general markets. And I think at that point you can start accumulating stuff again. But like Cred said, we like in the entire market as a whole basically is trending, and it's trending down, right? The S&P is trending down, the Nasdaq is trending down, crypto is trending down, everything is trending down, right? And if that's going to stop, there's a good chance, because last time it stopped with like this massive crash and then it immediately reversed back up, right, with the COVID crash. And this time around, it's either going to do the same thing, which, I mean, we haven't had a massive crash yet, so that's still out there, or it's going to just go sideways for a long, long time, right? So there's not really a need to rush into anything, in my opinion, just based on the fact that you're either going to have a lot of time or you're going to buy it right before a giga nuke, which both of them just kind of suck. Because if you buy and then you just have to wait for 2 years or like a year or whatever, how long it's going to take, you're going to lose faith eventually, right? It really, really sucks being in a position and then it not moving, or it moving like 20% up, 20% down. You make some gains, you give them back again. Like sitting in that position is going to take energy out of you. It's going to be like exhausting. And that's not necessarily you want some like a position that you want to be in. So I think it makes a lot of sense to just give it some time, because the markets need to either slow down or like just speed up significantly. And none of those things have happened. And I think that's the only way we can really bottom.
You got VIX FUD for us, Ledger?
Yeah, I probably do. But before I do that, I was just going to highlight a couple of times where everybody's freaking out in the market, and then it ends up not being like 08 over again. It's just something else, right? You see the number of weeks in recovery and then two responses, right? And this one, there was a whole nother down move. If y'all remember that Christmas Eve 2018 bottom, that's what this was. But point being, the recovery of the vol crisis, many weeks to make up for 2 down weeks. The peak earnings recession, or whatever they called this one back in 2015, 2016, many weeks to recover from 1 to 3 down weeks. So there is absolutely no reason that we have to take or like recover just on the S&P sense in like some tiny amount of time. Say you do some kind of capitulation, like you could spend until a year and a half kind of grinding up the wall of worry, even with like a reasonably good outcome. You know, it could take quite a while, and it's gonna that takes time for crypto as well. to play that out. All right, so if we go to the VIX, it's just elevated, right? It's like maintaining its elevation in the 30s, whereas when the market's really singing, it just crushes, right? There's a lot of these downtrends that you can point to, or just boom, and then like these slow crushes downwards, and then like 1 or 2 weeks upwards. What's a little, I'm sorry, these are months, but same thing. What's a little concerning here is like the trend is almost reversing, so it's this grind upwards for many weeks and this curl up, and it just looks like the type of thing that wants to spit up for, like really give you that pain for a bit. So I think if I was to say anything, like the VIX is elevated, but it's by no means like in danger of territory or peaking or anything like that. So if you got kind of your capitulation type of move, maybe you get VIX to 50 or 60 or something like that, and then that's when the market has some kind of like year-long bottom and spends the rest of the year recovering somewhat.
Yeah, and the thing is, market bottoming doesn't mean your portfolio has to bottom if you're like a crappy trader, right?
Oh,
Because
yeah,
usually you get like a high volatility implosion and then the low vol that follows. You're hoping it trends just as hard as the trend that took your money, but it very rarely happens. Yeah, very rarely happens on the outset. So I think get some hobbies is quite good advice. Maybe get a job as well, like unironically. If you actually no, I mean, I'm completely serious. Like
I agree.
Having money to deploy, like having more money in a consistent income stream, so you don't have to focus on trading conditions where you don't have an edge, and having more just capital in general to throw at stuff when you think it's advantageous. That's I think that's pretty meaningful. As far as stuff to do, I mean, obviously continue. Like, part of me wants to say continue researching and projects you like, etc. But part of me disagrees with that, and the reason is we don't know what the next kind of meme big crypto sector narrative is going to be. But I think it's quite unlikely that it's some derivative of something we've seen already. So maybe thinking about crypto in terms of first principles might help, or developing a valuation framework in general, or being a student of history or market cycles. Maybe that's more helpful, but I think that's much more compelling than look at projects that exist now so you can buy them next cycle. That I'm not so sold on, even though it does tend to be common wisdom.
The only thing that I would say that is counter to a capitulation bottom would be that yields have really blown the top off, and I think you could have maybe more of a rounded bottom, or a painful, an indecisive bottom, right? Like where you just can't quite detect it, where it's coinciding with what looks like essentially like a parabolic blow off top on yields. So that would be the one caveat to. We have to have a wick down. I'm not saying we have to have that wick down. I'm saying that would be the, VIX blows up 20 points and the S&P tanks. I don't even know what's impressive. We had several 5-6% down days. The S&P goes down 15% in a week, something like that. That is one way to bottom. Like you will find some inherent buyers off that. The other way is just to like really chop people up for a few days and slowly turn the corner until people realize that they capitulated what at least is a temporary bottom. That said, if that's the way it bottoms, the likelihood that it takes a long time to recover and repair is even higher.
Yes,
that prevents your rubber band type of rebound like COVID, where it was pure capitulation and then up only forever. It makes it to where you'll probably be sitting with no new highs for more than a year, which I think is highly likely no matter what. But
yeah, I mean, I'm like, that's the one call that I've made in the last year. I think it was in the last year where I've been saying like this could range for 3, 4, 5 years. That I still like totally stand behind, even though like it's starting to look like it wants to break the range to the downside. But even if it breaks the range to the downside, I think there's a good chance that it's just going to be like choppy again, like recovers a little bit, goes back into the range, and it just goes back to just ranging. Because like that's the one thing that we haven't had. We had that big big crash, but we haven't had like the time that you need to shake people out. And I think that's still missing. And we're gonna get that, whether it's gonna be at 30K or like at 20K, I don't know, for Bitcoin. But I think it's highly likely that we're gonna have like a big range that just keeps on going, where you just turn fucking crazy.
Well, I was thankful to finally, once, this diagonal, now that's gone. I finally got to redo my lines and turn it into the dawn range.
That's why you nuked the market. You were like, I want to get rid of this diagonal, but I need the market to break it first. You just sold everything.
Truly, I just sat there looking at it. I was like, this is not ever going to be relevant. This line just it's not good for anything. So yeah, now we're just sitting here, and this is Don's $30,000 range of pain. Like, I don't think you can call this sideways or crab, to your point earlier, Cred, but it doesn't mean it can't be your range. Like, it's just,
for sure, yeah.
It's just an absurdity of a range is the part that because your classic 137% upside inside the range.
Support to resistance 2x on the majors or something. Yeah, no, it's insane. Also, a lot of our public big ticket Bitcoin purchases are roughly around their break-even point, right? Like, if you take a LFG, Musk, Sailor, but he's like a slightly tricky one. El Salvador, he's been a bit quiet, right? Understandably. I think that basket of, Tesla, I probably mentioned them. Might have said it twice, whatever. We're roughly there, right? Because they're somewhere in 30 odd, and so is the market. And that's at a time when, a lot of stuff looks pretty weak. So I'm wondering if anyone's going to be in a position to shift around their holdings, to put it charitably. Some more likely than others.
The interesting part about that is that, like, if you've ever bought like a tiny market cap coin or whatever, you've probably made that kind of experience, that if you buy that with like decent size, right? If the market goes, like, if you buy and you keep buying and buying and buying, you try to get in, right? And you have like troubles getting in. If the market just kind of reverses the entire move that you've made by getting into the market, it's usually because the market as a whole wants to move down, right? Like, people are going to dump on you. And that's kind of the feeling that I get when I hear that, right? Where it's like, you have all of these big guys just buy, and the market doesn't go up after it goes down. It's just kind of like a shitty situation where that they're locked in, right? If they start selling, this market just fucking disappears. And it's not going up because they're buying. It's like a really, really shitty situation to be in. And strikes me like a little bit bearish on that front, where it's like, if some of them, or if even just one of them, starts being like panicky or starts realizing losses, we're gonna have like a really nice move to the downside. I think it's a weird situation right now where it's like we're reliant on Luna, we're reliant on these like big guys to not just start selling, we're reliant on the S&P not going down. And when you make all of these excuses, right, where it's like, the market wouldn't be bearish if the S&P wouldn't be, but like, is that really the way you want to be going at it? Or is it like, if it was truly bullish, we wouldn't have to make these kind of excuses, because then it just wouldn't trade in lockstep? And I think that's more the situation that we're in right now, where like everyone's trying to make excuses for a weak market, and me being one of them, really. And like, at the end of the day, it just kind of looks shit. And that's something that we have to deal with.
I've said this a lot, but the time that it takes between euphoria and like a start of new euphoria, roughly 3 years last time, just under that. So if you do the same thing this time, it would mean just don't even bother until the end of 2023.
And that was incomparable monetary policy wise as well, right?
Yeah.
Like, environmentally, if you will. I also think when you get just as a side note, in terms of slightly more recent stuff, when you get a market that's kind of gone down for 6 weeks in a row or whatever, if you get a bounce, because so much stuff is broken, and just the sheer one-sidedness of the move, you should set rather clear criteria for what it would mean for a bounce to be trend reversing, rather than just like mean reverting, right? Or just like a dead cat bounce or whatever else. So, if the market were to rip back to, let's say, around the breakdown point on like BTC USD, so I don't know, like 35, 36K, the question would be, would that change anything structurally? And I think, at least for most of my systems and market structure oriented people, the answer would be no. So if you catch yourself getting trapped on a final green weekly that we get after like 5-6 weeks. I think 2018 was a completely appalling example of this, where some of those rallies genuinely looked face melting, right? Like really strong, massive percentage moves in absolute terms, etc. But they did absolutely nothing to reverse the larger trend. So I think that's something worth bearing in mind, given how many just red weeks we've had in a row and where the market's getting relative to its range, yada, yada. If you do get a bounce, that's awesome, especially if you can trade it. But you should set some rules for what it would mean for a mean reverting bounce versus just versus a trend reversing bounce, because those two things are very, very different.
Yeah, I mean, I can basically remember where I was and the hopium that I felt on this move, on this
I remember
move.
the first one, the one all the way for the one down to like 5.
This one?
Yeah, that one I remember like it was yesterday. The other ones, I think I was just too poor and defeated to do anything well.
I very specifically remember like, oh yeah, maybe this is the one, maybe this is the one, and how you can have a lot of conviction here, which is fine for like the bounce. The question is, can you have the realism up here, to know like this is a different environment than this back here. And that's probably what we're going to run into here again, is when you get the bounce, are you going to realize that the environment here is different than the environment was back here? But it's hard to try to say like, go sell everything right here, like.
Yeah, it seems crazy, especially at monthly support. It's like, yeah, you can't really give good advice. It's something I always say when the dump's underway, like you can't really give good advice, because even if you say like sell here and it goes down 20%, it could be up like 40% the next hour, right? Where it's like, it was good advice in that second, but it's not like longer term good advice anymore.
Not that we would ever give financial advice.
Never. Something that's been going on is like the UST DPEG, which is getting like, while we're on the show, it's getting worse again. What do you guys make of it? Do you think it's gonna turn back and just go back to pegged, or do you think it's just gonna be like waves where it goes down like 40% and then comes back and pegs again? Or any views on that?
I think people are going to throw quite a lot at this to try to keep it.
Yeah, they already have though. Like that's the crazy part, right? Like they've put so much into it and still not, like it's still looking rather shitty.
Yeah. So there were somebody, it was theorized that it was Jump Capital, was selling 1,000 ETH every few minutes in order to turn it into USDT to start this recovery after it dropped. It was 1.5%. Some commentators on Twitter noted that USDT got all the way to the 80s in kind of peak capitulation and various moments of previous stablecoin fears. I do think Tether and Terra are very different mechanisms for how the peg works, right? Like one may or may not have full backing, but it's supposed to be backed. The other one is an algorithm that people are actively trying to break or test or whatever they're trying to do. Like, I don't know all the games that are occurring there. So I do think the potential for this one to have more significant breakdowns is higher. I just don't think it's a I don't think it's a medium to long-term systemic risk. It might cause some pain in the near term, though. That could create a buying opportunity in my mind if it actually has a big impact on Bitcoin, Ethereum.
Mm-hmm.
Yeah, that's
what
I mean, it's
I
clear they're
think as
throwing a
well.
lot of money at this thing, right? But I also just don't like that for the market in general. When we're looking at, the S&P and just tightening cycles and all of that stuff is orders of magnitude more important than whatever tiny stuff we talk about crypto. But even within crypto, having like, oh, it's okay, Jump Capital like backstop this whole thing. Like, oh, Alameda wouldn't possibly let the market do X, Y, Z. No, it never inspires confidence when you have to like psychologically make a deity out of one or two entities and assume they're going to hold things together and absorb more hacking, selling, pegging, whatever other INGs,
Can we just highlight one extra thing and find on the chart when the land sale occurred?
Oh, yeah.
I mean, this was classic, right? You say you create a false forcing function on why the token is needed to say you have to have ape to buy land in the other side. And then after that land is bought, there's no reason to own the token. So it's down 56% in under 2 weeks. I don't know. I didn't really have a mechanism to short this, but I would have loved to short this. And I kindly request FTX US to put more pairs.
Yeah, that's very event driven. Also, just like it was one of those where there's only one game in town in the altcoin markets, and all the open interest converges towards like 1 or 2 plays. And once the event is over, that open interest only really unwinds in one direction. Eiffel Tower type of structure, and I think GMT was kind of looking similar. I think those were like by volume, they almost flipped Bitcoin and ETH. You had like Ape and GMT doing close volumes to Bitcoin and ETH, which is mental. But that's sort of what you see when the market's in this kind of state. Ponzi games, 1 or 2 coins at a time, 1 or 2 NFTs at a time, and then trying not to get carried out by correlations ticking lower. I saw art blocks pumping, Ledger. Is that like the DeFi perp equivalent, right? Like where art blocks pump is like, oh my god, we are in trouble.
Don't speak ill of my wrecked bags, sir. I'm trying to get exit liquidity.
Just do the nade. Just put them on the front page of Flip like all the time, and then try to trade around that.
So, don't try to nate me. We are working on. We don't even have art block support right now because of the way parent collections work, but we will soon, and then I guess we'll nade it pretty hard, but not on purpose.
Oops, it's just my collection.
just happen to get art blocks collection now that it's up 3 or 4x.
Gainsey pays you like $100 for Rebel Robots or whatever.
Gainsey's going down with that ship. He's a man of his word. No, poor ApeCoin people. I'm pretty sure they're going to live this life as well, where they just have to go through it.
Do you think it'll happen to Bored Apes? Because Don and I were discussing this, whether Bored Apes themselves will go through like a classic crypto market cycle, either in USD terms or ETH terms or whatever else. How are you thinking about that whole thing?
I think anybody buying a Bored Ape for 150 ETH is going to feel like an incredible amount of pain. One of the things I noticed with NFTs is a lot of people just assume that they have liquidity for the NFTs that they own. And I think that's likely the number one thing to just go away. Is that where you have an assumption of liquidity and an ability to exit? It's not actually your net worth, because you can't sell anything unless you're adding another 20-30% discount on them once the liquidity goes away. And then while the liquidity is going away, you're going to lose a bunch too. So even if you maintain, like say a Bored Ape goes to 80 ETH instead of 150, but to actually sell one, you might have to put it on sale for 70. You know what I mean? That said, it's still a huge win for people. I think many of those projects are going to have a reckoning, because the way for them to succeed is exactly the same way that Bored Apes went. To succeed the most in the shortest amount of time frame, at least, is you constantly do new mints and you fracture your internal liquidity and you create liquidity suction cups. Like with ApeCoin, you create a coin out of thin air, give it some backing, but over time, like you're just spreading out further and further and further the available dollars that exist, because the people buying ApeCoin on the way down are people who are bullish on apes. So it's sucking liquidity off of apes to support ApeCoin or whatever else. And it's same with people that decide they want to increase their exposure to mutants or Kennel Club or whatever else. And at some point, I think you create enough of a fracture of that liquidity that you end up with a pretty gnarly bear cycle, as your massive buying power from all those huge winners starts to fizzle out, and then what you're left with a bunch of really, really, really thin books across several markets that they've created while it's gone up, and it ends in pain.
I pretty much feel like I said the same thing when we talked about it. It's like it's just the perfect playbook of making the most out of the hype that you have. I mean, I gotta hand it to like Yuga that they just like played it perfectly.
You've got to hand it to them.
I don't even know that I would say it's like the wrong way to play it. I just think that when you have contraction, that's the way it works.
Yeah.
Long term, sure, maybe they'll be able to build all this incredible stuff, but on the even the current valuations, like I'm expecting like there to be Yuga Labs versions of Universal Studios. You know what I mean? Like you need the movies and the theme parks and the plush toys and contracts with Walmart and Target and board games. And like you need to create an enormous brand to support that utility. And none of that's there. There's just collections of JPEGs.
For now.
Yes. Yeah. But building into the valuation takes ages.
Yes, it does.
And it's not to say they can't. It's just, it's certainly not the place for upside in my mind. But anyway.
Yeah, I'd be terrified holding some like Zoomer portfolio of like Roblox, a bunch of Chamath SPACs, and, you know, metaverse land and NFT derivatives, GME. People are going to be upset that I put that in the same basket. But, you know, in general, that it's a scary time for meme coin, Ponzi portfolios. I mean, it's a scary time for virtually everyone with exposure to markets, unless you're like macro fund, commodities, whatever else. But the Zoomer collective is definitely feeling it the most.
Yeah, and we're over time. We could keep going talking about all the froth that's out there, but like it's not even, those are the froth, like the top of the froth. But you just look at the rotations off growth stocks, like even ones that are profitable and make money, like they're getting freaking wrecked. Yeah. And it's just, there's a time for capital growth and a time for capital preservation. And if you can preserve capital at the current time, then you've done all right. All right. Thanks so much for being here. It's been a pleasure. Hope to talk to you soon. Hope you are able to preserve some capital, and hope you check out our partners over at FTX. Go to weeklyopen.com/FTX, trade from one asset to the other. Thanks for being here. Talk to you later.